Good morning, it's Jeffrey Cohen. It's Monday, June 6th. Coming here with live market action pre-market. This is Chicago Quantum, the bottom line. So, I'm going to walk through the blog post that I made because I've already written up everything I want to tell you. U.S. equity markets are set to open higher by about 1%, but are weakening actually as we're doing the blog post. Silver's up. 22.48, it's up 2%. Oil's flat, gas is down, natural gas is way up, and copper's down. These send us a mixed message. See, natural gas, gasoline, oil, right? Energy prices. We were expecting to see gasoline up, 4 or 5% this morning. It's not. It's going to be helpful for the economy. Copper down 1% actually indicates a weakening economy. Silver up 2%. Has a little bit of economic pull to it, but it also could just be speculation. Silver's now up almost 3% this morning. We've got it in the lower right corner there. The VIX is at 25.40. That means the market's starting to settle down. The volatility, the riskiness of the market is starting to fall. It could be that this is summer doldrums, or it could just be an increase in liquidity or confidence, or even something greater. Food commodities are up today. Wheat's up 3.5%. So U.S. dollar is slightly weaker. The euro dollar is at 107.30, and 100 Japanese yen per dollar is 76.55. We've seen euro dollar, much weaker, much stronger. We've seen the Japanese yen recently stronger. So weaker U.S. dollar, so the dollar continues to strengthen against the Japanese yen. We looked at the S&P 500 E-minis, the futures, right? So there's a June 2022 future that trades at 50 times the index value. So one E-mini future for the S&P 500 trades at about $208,000. So little high maybe to hedge the Chicago Quantum net score as it is now if it's just our money. But you get a couple $1,000,000 in there and you can start to use E-mini futures to hedge the Chicago Quantum net score up portfolio. There's a micro E-mini future which trades for about 20 grand a contract, but we're not sure at this point if it has the same liquidity. It does allow for hedging of much smaller portfolios, which could be interesting for sophisticated but smaller investors. We were wowed by crypto today. Crypto's much higher, 31,375. Last night it was 31,111. We were going to send a tweet saying that this was an auspicious number and probably going to go higher, but I thought it was magic and silliness, but it did go higher. So this will likely support the crypto stocks that we follow, such as Mara, Riot, Silvergate, BTBT, HUT, CLSK, CAN, and SLNH. It'll also support the trading applications like Cohen and HUD. This is a support for a risk asset that's not equities, and we find it interesting. Fixed income. The long bond at 138.19. The 10-year at 118.56 are about the same as Friday. So we looked at yields. And what we found was the 30-year U.S. Treasury is yielding 309. The 10-year and 5-year are yielding 292. The 1-month bill is yielding 85. It's so interesting, right? Because your money in the bank earns whatever, 0.5%. But this says if the bank can earn risk-free in 1 month 0.85, they could probably pay you almost 1% on a money market. One of those controlled money markets. So I think savers are going to see more money in their savings account, more yield, and that could pull more money out of the stock market. Before I keep going, I'm going to go through and flip through some of the pages we had. So here was the silver continuous contract, right? It's up 2.82%. That's pretty darn high. The E-mini S&P 500, just wanted to show you, and then there's the E-mini, the micro E-mini equity futures I thought was interesting. So this is the overall futures. And we've got them actually in our blog post, but I'm just going to pull them up for you. So you see the VIX at 25.30. You see the All the U.S. equity exchanges are up. Euro's up significantly. Nikkei was up almost 2%. The 30-year bond is down, which means yields are going to be up. So that's interesting. Since we wrote the blog post, the 30-year bond, the 10-year note, the 5-year note have all weakened pretty significantly. And the U.S. dollar is about where we saw it. Crypto's up. Crypto's up a lot. I'm telling you, this is important. We looked at our Yahoo Finance, just the futures, right? The equity futures are up. Oil's down, as we talked about before. This shows the 10-year bond yields are up. We're looking at it more as the bond prices are down. All right, let's catch up. So we just wanted to talk about the spread. The reduced spread may not be so good for banks. So what happens is when your 1 month is at almost 1% and your 30-year is at 3%, there's like a 2% spread between short and long money. That tightening is not good for banks. So banks may still be borrowing short and lending long, which is a disastrous combination. And think about it, right? Your bank may be paying as much as 1% for short-term money, but yet risk-free overnight, the reverse repo rate, is only 0.08%. And banks are taking advantage of the reverse repo window more and more. This is Fred. This is the economic data from the St. Louis Fed. We trust this data. This is the overnight reverse repurchase agreement size. So you're a bank, you have extra money, overnight, you say, all right, here's good collateral. I'm going to give you that money overnight, Federal Reserve. You're going to give it back to me in the morning. You're going to pay me less than 1/10 of 1%, but that's better than what I'm earning now, which is zero. I have no use for the money. And if you look, this is the 2,000 mark is billions. So 2,000 billions is a trillion. 2 trillion. So we're at $2 trillion of money being parked at the Fed overnight. Just so you know, that's crazy high money. It's not good. It just says there's tons of liquidity. Going back to our write-up, the good news is quantitative tightening, where the Federal Reserve is going to be allowing to mature and not reinvesting the money. The first $1 trillion of liquidity will probably come from these banks that have excess reserves. So it's okay. It can happen. In fact, if they were to do it quickly with some open market operations, they might be able to target some of these banks that have excess reserves and just work it out. Work a discount, work something, pull $1 trillion out of the market really fast, and then tell us about it later. Probably fix a lot of the inflation problem really fast. Remember, there's maybe $30 trillion of currency out there. It's between 25 and 30 trillion. You pull $1 trillion, you're pulling 4%. That takes half the inflation right off the table. I'm just saying. It's fast, it's easy, not a lot of drama. So let's talk about corporate bonds. We do like to share this chart with you while we talk. It takes longer when I share these charts with you, so you're going to have to let me know whether it's helpful or not. Maybe just drop me a note. Is it helpful if I have to flow through all the charts? Because for me, it's actually very distracting. We shared a Goldman Sachs note on Friday or Saturday indicating that high-yield corporate debt had a great week last week. Oh my, many new issues were priced, demand was strong. They indicated this week is going to be much weaker with only one issue to be priced. So we saw strengthening in the downtrodden stocks that we follow, which was confirmation of that point. Corporate bonds were down on Friday, right? The new low, new high ratio right here was 10-1. 36 new highs, 362 new lows. The decline advance ratio was also 2.25. So we saw 2,400 issues, higher, 3,400 issues lower. That's a 2.25 to 1 ratio. What's interesting is investment grade bonds suffered the worst. The new low to new high ratio was 24 to 1. 244 new lows, 10 new highs. I just want you to think about that for a minute. Bonds are being pounded down. And it's the investment grades that are being pounded down because they were previously seen to be able to pay back their debt, but maybe not, right? So the market's betting against them. Final point. The pre-market movement of 4 industries that we follow, the proprietary indices that we follow, are all up significantly. This all points to early morning money moving into momentum-based sectors. Think about that. Early morning money is moving into momentum-based sectors. Now we're going to check right away before we close out the video to see if that's still true. This was about 30 minutes ago. We don't always listen to pre-market moves because let's be honest, they're at lower volume. They cost significantly more to make those trades. At times, the spreads can be 10 to 100 times larger. Go from a penny to $1 to trade a share of stock. That's crazy. But on large, consistent moves, we take notice because money probably wants to be in place before the big moves happen. So we saw 4 industries that were dramatically higher: money managers, specialty retail and furniture, chips and semis, crypto and physical miners. We also saw trucking and transportation up, but it was only half the breadth. We're going to take a look at that, and then we're going to talk about stocks, potential runners. Potential runners that we follow that we want to discuss. So let's take a look at those indices for a minute. I'm going to pull them up into the upper left, into the pole position here, right? And so we sort by pre-market. So money managers, significantly up, but the numbers are not high. Specialty retail. So, okay, Amazon split. So that's why it looks crazy. A couple of stocks are down. Most are up. Percentages are not high, except for in China, Alibaba Group. So interesting, China. China moving the market for us, or at least Chinese stocks. I kind of read a whisper somewhere that said maybe the government wasn't going to be so rough on the companies. Chips and semiconductors are all up or unchanged. Numbers are significant, 1% or more pre-market. Crypto and miners, without sorting, they're all up. All of it. All of it's up. That's really, really bullish for risk assets. Trucking and transportation, to the extent they traded, all up except one is down. Canadian Pacific Railway is down. Everything else is up. So yes, markets are up. The high momentum stocks are up. Just know it. Just know that right now, the market is looking and we're going to go to the one that was the most kind of interesting to us, which is crypto and miners. We're going to leave that up on the screen there. Now let's take a look at potential runner stocks. Mullen, View, Auto, Vroom, Cohen, COS, GBR, MTMT, and many more. And we're going to flow through them right now. By the way, I do have a bank stock analysis that I'm working on. If anyone is interested in looking at bank holding companies, give us a shout. It's so much work to work on the spreadsheet, to update the Python, to look at each individual stock. So Coinbase, you see, has dropped significantly from $350 to like $60 and has been pretty flat. Coinbase is going to move up most likely on the crypto. View, pre-market, flat. Nothing happening. Look at Mullen. Mullen is, I'm not going to say it's running pre-market, but it is up. It is up 16.5% on 12 million shares. Mullen Automotive is up. Now, if you've watched previous videos, you know we have a firm belief in Mullen Automotive and what's happening there. But without talking about any of that, Mullen is up 15.75% pre-market. Take notice. That is your pre-market runner. Mullen Automotive. New Concept Energy. It's up, but not on very many. It's down. New Concept Energy is down. That's one of those. That's a canary in a coal mine for runners. COS is up, but just a touch. Mega Matrix, the old Aero Century, is up 4% pre-market. These are possible short squeeze stocks just in general. This is a whole mix of garbage, basically. And you can see Mullen's up, Coinbase is up, Mega Matrix is up, but everything else, nothing's really running. And so on that note, I want to say thank you. Thank you for listening. I hope you enjoyed the video. It's much shorter, much tighter today. We did a lot more pre-work. If you liked the video, drop a comment below. Let us know. Hey, Jeff, the sound, the quality, you were much tighter today. Just let me know, right? And if you want to be notified about future videos, hit the subscribe button. So leave a comment, hit the subscribe button. We're not paid to make these videos. We do not own any of the stocks we discussed. We on purpose didn't talk about anything we own or have positions in. I just wish you to have a great day. Good luck in the markets today. Bye-bye.